We've also got Scott Bauer joining us here this afternoon. He's the CEO of Prosper Trading Academy. Scott, thanks for giving us part of your Thursday afternoon. We covered a lot of companies that are getting hit by coronavirus with you and other guests on the show. We're talking cruise lines, airlines, hotels, travel sites, but we've really yet to dive into some of the rental car companies. I thought it'd be a good thing to cover today. You've got your eye on them. Midday movers, again, is something that looks for big movers, and in this case, Avis seems to be one. Ticker symbol CAR after JP Morgan downgraded the stock to neutral from overweight, and they actually lowered the price target to 13 from 20. Looks like they've been in a range, though, between about 6 and 20 since selling off that Feb high of 53. What are you seeing, Scott?
It is right in the middle of that range and rejecting it, Ben. So I agree with this downgrade. In fact, I'm surprised the downgrade didn't go to an outright sell instead of neutral. Any of these stocks, and I'm looking really at Avis and Hertz specifically, I think in the near term, in the next probably quarter, the next 3 months at least, they have to be sold on any rally because people aren't renting cars. People aren't buying cars.
Yeah.
You know, many of these companies also have that arm of where they sell their cars or they lease them out.
That's right.
You know, after they've gone through, you know, a year, 2 years, whatever it is of rentals, people are just not shopping for that part of it either. So again, in the next quarter, I think both of these have to be sold on any sort of rally.
All right, CAR currently trading, as I mentioned, down on the day by about 0.5% at 11.94 right now. Let's take a look at another one. Let's take a look at Hertz, HTZ, because they're taking it on the chin here today. Looks like if lower today, they're down something like, it looks like 5 or 7 out of the last 9 days. I mean, this stock has really been taking a hit. They rallied off that March low that they saw at 318, but it does look like investors feel the same as you just mentioned, that, well, rallies should be sold here. Scott, your thoughts on Hertz?
Same thing with Avis, really. You know, obviously from a pure dollar standpoint, there's less risk of this thing going down just because of the dollar standpoint at, you know, what is it, 25 or 30% of what Avis is. Nonetheless, the industry, though, is in poor shape. And until some things get relaxed, until you see the airlines getting relaxed and people traveling again, I just don't see people getting in cars that are not their own.
Yeah, I mean, we've gone from sitting in lines and being frustrated about how long it takes for us to pick up our rental car after we land, and our kids are pulling on our jackets and tugging at our suitcases and stuff, to all of a sudden wishing we could go on vacation and experience those that madness once again. Let's move on here, though. Let's talk about a couple companies that are set to report. We've got Intel on the close. What are you seeing in terms of ticker symbol INTC? Looks like they're down about 0.75%, but a bit range bound as well, 62 to 56 from what I'm seeing after coming off a low around 44 from mid-March.
Yeah, it has been range bound, but I'm really bullish on this stock going into earnings, Ben. They've been hitting on all cylinders. It has been range bound. This thing's going to break one way or the other, but there's a massive amount of support down in that 56, 57 area. So if this thing did break after earnings, I'd be a huge buyer down there. Now, you look at what is expected here. They raised their first quarter guidance, on last earnings report, but now because of everything that's happened, they've also suspended buybacks. So, you kind of have a push and a pull there, but I think there's a lot more room to the upside here. This is one I think many analysts are actually looking at a sell the news, a buy the rumor, sell the news, because this thing has been strong lately. I would not be surprised if they pull their guidance like many other companies, but report really, really excellent numbers. There's been a big demand surge. I'm looking for an upside move. I think the market maker expected move here is about $3.50, going out to tomorrow. So, that upper end that you had just talked about, Ben, 62 is well within reach.
Yeah, that's right there. All right, let's take a look at earnings per share in terms of what's estimated here. They're looking for, it looks like from Intel, $1.28 on revenue of $18.75 billion. Now, Scott, I see what you're talking about in terms of some support around 56 here as well. It looks to me like as long as they hold up above 52, 52.50, that trend that I mentioned, they've been in intact off that March low, or I should say the trend they've seen off the March low is intact. This is the area I'd be watching, the middle of this range, in terms of the area that formed prior to the one that that Scott was just talking about, and Scott mentioned here potential for a breakout above 62.50. Scott, one more on your radar today. You've got Skechers also reporting on the bell today. I saw they're looking for an estimated 38 cents a share on ticker symbol SKX, and it looks like on 1.22 billion. What's the chart telling you?
You know, I love the product. I have a bunch of Skechers shoes, but I think that they're going to run into some big-time trouble on this report here. Another one, they're going to pull guidance. Looking for a top and bottom line miss here. And just based on having to shutter stores and them not ramping up so much the online portion of their business, I'm a little concerned about
I was going to
one.
ask about that. Yeah, I was going to ask about that because that seems to be what's really helping companies stay afloat right now. And I oftentimes think of Skechers as a mall store or some sort of a store that you would actually, a brick and mortar more so than an online. You can see the chart there and the move right now, basically holding right around unchanged. So we'll keep an eye on them, but they certainly have been coming off. Scott, we're going to let you go here. We really appreciate you giving us part of your Thursday afternoon. If we don't see you tomorrow, have a great weekend. And again, a great breakdown and always a pleasure. Trader Scott Bauer is the CEO of Prosper Trading Academy. He's joining us to help us take a look at a couple stocks that are going to be reporting quarterly earnings and a couple rental car companies that have been coming under pressure with the coronavirus concerns.